Mortgage rates just fell to their lowest point since the middle of May. Here's the part most people miss. It happened in the same week the government's main inflation report came in at a 3-year high. That's not supposed to happen. Today, I will show you why it did and what it means for you and your family. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of June 26, 2026. Let me start with the big picture, then break it down. Rates moved lower this week, and the bond market did most of the heavy lifting at midweek. The market is now closed for the week. The 10-year Treasury yield closed at 4.37%, down from 4.46% a week ago. That drop is the engine behind lower mortgage rates. So why did rates fall in a week with hot inflation? Part of it was lower oil and an inflation report that landed right on target. But the bigger force was quieter. This was the last full week of the quarter, and large investors were rebalancing their portfolios. Stocks have run hot for months, so many of them were buying bonds to get back to their targets. More demand for bonds means lower rates. There was no single dramatic headline behind the move, and that is the point. Not every improvement needs big news. Here's the inflation picture. The PCE report showed prices up 3.4% from a year ago, the highest since October 2023. On paper, that sounds bad for rates, but oil has dropped back under $70 a barrel, near pre-conflict levels, and lower oil should pull inflation lower in the months ahead. The market is looking past the high number to what comes next. Here's what to watch underneath the surface. The economy looks fine on top and softer below. First quarter growth was revised up to 2.1%, but when you dig in, most of that came from fewer imports and government spending, not the consumer. A cleaner read on real demand actually slipped from 2.4% down to 1.7%. On the job side, first-time unemployment claims remain still low at 215,000. But people are staying on benefits longer. Continuing claims hit a 3-month high near 1.82 million. A softer economy tends to be friendly to rates, and that is part of this story. What about the road ahead? One outlook we follow expects the 10-year yield to keep working lower to test 4.20%. The logic is simple. Oil has returned to pre-conflict levels and home building has stayed soft. Both of those tend to push rates down. One caution, with the quarter ending, a few more days of rebalancing could still swing the market either way, though the bulk of that move has likely passed. Now to where rates ended the week. These are national averages from Mortgage News Daily, not an offer to lend. The 30-year conventional is 6.53%. The 30-year jumbo, 6.76%. The 30-year FHA, 6.07%. And the 30-year VA is 6.09%. All of them finished at their lowest levels since May 14th. This is a good moment to remember a simple idea. Strategy beats rate, always. That brings me to something many people need and do not know to ask for. Maybe your tax returns do not tell the whole story. Maybe you own a business, work for yourself, or write off a lot of income on paper. On a standard loan, that paperwork could work against you. We carry a selection of loan programs built for exactly these situations. The first one to know is the bank statement loan. It looks at the real deposits coming into your bank, not just the bottom line of a tax return. If you earn well but show little on paper, this is the program to remember. You can learn more at rsrlinks.com/bank statement. We also shared a set of pieces this week that you'll want to read. First, home prices are rising in 71% of the markets. The crash you were promised isn't coming. Next, overpricing your home costs $19,000. Here's the math that proves it. Your credit score sets your insurance rate. Here's the math most people miss. Here's what nobody tells you about selling your home until it's too late. And finally, your 90-second AI trust could send your family straight into probate. There are more on the dashboard. You'll find all of them on the right side of your dashboard or below the video, depending on the device you're using. One more free tool. KeySteps is a free platform offering credit monitoring, identity theft protection, and household budgeting tools all in one place. Visit rsrlinks.com/keysteps to put it to work for your household. Next week is a short one because of the 4th of July. It is also a jobs week. We get the ADP private jobs report on Wednesday, along with ISM manufacturing and a speech from Fed Chair Warsh. Because of the holiday, the big monthly jobs report moves to Thursday instead of Friday. Forecasters expect about 114,000 new jobs and an unemployment rate of 4.3%. That report is usually the most important of the month, and it could decide whether this week's improvements holds or fades. A softer report would keep the friendly tone going. This is your weekend update. We appreciate you listening, and we'll speak to you again next week.